All right, guys. So we're doing a recap of yesterday's market. We want to look at one particular stock and try to identify good entry points. It's easy to look back on a stock and say, this is where I would have gotten in. Um, but the more that we do that, the more we're able to recognize patterns. And that means, the next day, we'll be able to see those patterns happening in real time and we'll be that more confident in getting into that stock. One of the big movers yesterday was CARV, C-A-R-V. I have it up on this screen. I'll just pull it up for you guys right now so you can take a look at it with me. This stock went from a low of $4.15 yesterday to a high of $6.67. And it looks like it did it, let's see, it started its move around 11:02 a.m. and got to the peak of its move around 11:33 a.m. So there wasn't a lot of time there, maybe like, less than 20 minutes or so. That's how much time you have to that's your total time to analyze this stock. And so then it rises up from 478, it keeps going all the way up to 416, keeps rising, and then gets halted. I think it got halted around, let me pull this up on the screen. The first time it got halted was around 11:10. Once it hit $5.22. Then it resumed at 460. Ooh, that was a six. Wait, no, that's the wrong one. Sorry, guys. It resumed at 558. So it got halted at 522 and resumed at 558, which we often see with halts on stocks that have momentum. They, suddenly they're rising up really quickly, and the SEC is like, hold on, let's slow this thing down. They pause it for a little bit, and then as soon as they resume it, all of the people who weren't in before, or the people who are already in the stock, they choose to, either add to their position, or other people come in and they want to get a piece of the action too, so they jump onto the stock, and then suddenly you see it. When it resumes from the halt, it drops a little bit, but then pops back up. That's what we usually see. We don't want to sound 100% accurate, 100% certain, because you never know what can happen. Sometimes it can just drop, but most of the time when a stock has good momentum and it's the first halt, after the halt, it'll drop a little bit. People will take their profit, and then it'll surge back up. The good thing about that as well with halts is if it halts at a certain price, people who would like to go long see that as well, and so they jump into the stock. But shorters also see it, and they jump into the stock because they want to bring it down. So if the bulls win that battle, the longers win that battle, then what happens is the shorters have to cover. They get pushed out of the stock, and that's what produces that big spring forward and pushes it even higher when the shorters start to cover. So I love to see that. So there was a halt there at 11. The first halt was at 11:10, resumed at 11:24, got halted again. Resumed at 11:20, and then got halted again at 11:24, and then resumed at 11:29. So let's identify some potential entry points on this stock in which we could have gotten in. So we see this first surge sort of happened right here. I don't think anyone would have noticed that. That was like a sudden gap up all of a sudden. It didn't seem like anything happened. It just like gapped up out of nowhere. And then it starts to consolidate, going sideways for a little bit, and then it pops up from 468 to 521. So that's a pretty nice move. By that point, it should be on everyone's scanner. And I think this is where it got halted, actually, right here at the top of this move. So great, it gets halted, everyone picks it up. You see it opens up right here, goes down slightly, and then boom, pops right back up. And so there's let's see, if you were lucky enough, you saw it pop up on your scanners and you were able to get in maybe around this area, but this would have been chasing it. So maybe you wait for the pullback right here, right? That's a good place to get in, and then it opens up and pops up. You can take your profit there. Another place is at the top of this move. You don't get in at the top. Notice that on the next candle it pulled back. So you simply draw a trend line along here. This is called a pullback. You draw a trend line along the top corner of the highest candle, the high of day candle, and then you wait for it to break that line. So you see right here, it starts to surge back up, starts making higher lows, and then boom, it pops right out. I would have gotten in once it broke the high of this candle right here, the higher candle. This would have been the market high at that time. So right here at $5.62, you get in. It pops all the way up to 5.86. So you can make a quick 10-cent, 15-cent profit or so. And the next candle, it jumps up to 5.98. So if you're still holding it, you could have made like 20 cents or so. That would have been a great move. And then on the next candle, it pops up and drops down. So this could be the same exact play, another pullback, right? You don't get in at the top around this area because this is chasing it. It's already on its move up. You wait for a nice pullback. So right here, there's another pullback. You draw a line across, waiting for it to break that line. And right here, where it would have been at its market high, again, $6.19, this would have been another good place to get in. It would have rose up to 633, probably came down a little bit and then popped all the way up to 667 and then came down. So that would have been another good entry place, quick 15, 20 cents. These are safer methods. A lot of people probably chased this stock and they probably lost. But you want to look for pullbacks, patterns, signs that you should get in. Some of the other signs is the increase in volume, and you see that increase in volume right around this area, right around here. So as soon as it breaks this area, that it's pretty safe to get in at that point. And then it flushes back down. So you wait for it to cross the $6.67 high again. And as you can see, it never got back up to that level. So you don't get back in. It sort of traded, started going down for the rest of the day. Other people who didn't have patterns probably lost on that. And so you want to recognize where to get in. And if it doesn't break certain patterns, don't get in. It's no need to chase it. And one thing that's going to help you guys is if you look at the daily chart for this stock. This is a chart that's going back 6 months. So this was today's spike, where it spiked up to $6.67. How do you recognize resistance on a chart? Well, you do it by looking at the stock's previous performance. How did it do yesterday? How did it do earlier today? Where did it run into trouble 6 months ago? Things like that. On this stock, you could have seen that the next level of resistance for it, as it surged up, was right here in this area, right here around August. So if I zoom into this area, you see right here on August 23rd, it reached a peak of $6.67 around that area. And look at that. Coincidentally, yesterday it also did the same thing. $6.67 was its limit. And so it's if you had your daily chart up, you could have seen this coming. You would have had resistance lines drawn on your chart. And then as the stock started to surge up, you would have been able to identify where it would have ran into trouble and you could have gotten out. So these are just quick tips on how to recognize patterns in real time. The more you guys can see these on a previous stock, the better the chance you have of recognizing them in real time in the future and being able to be profitable. All right. This has been Israel from Smooth Trades. You guys have a good day. Have a good trading session. Take care.